Welcome to another episode of China Update, where I provide you with the most up-to-date political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. Let's jump in. Happy Saturday, everybody. I hope you're having a good and restful weekend. The last 2 days have seen very long videos. It's the weekend, so for today I'll try to keep this episode short. And we begin by continuing our coverage of China's long, painful equities rout, as Chinese stocks just capped another terrible week. The story is beginning to get fairly widespread attention around the world, with several trending US-based Bloomberg articles alone on the slide. In one piece, the outlet explains grim milestones have kept piling up in recent days. Tokyo has overtaken Shanghai as Asia's biggest equity market, while India's valuation premium over China has hit a record. Locally, a meltdown in Chinese shares is wreaking havoc on the country's asset management industry, pushing mutual fund closures to a 5-year high. In Hong Kong, the Hang Seng China Enterprises Index has already lost 11% in 2024. In the US, the Nasdaq Golden Dragon China Index saw its 5th consecutive day of losses in Friday trading, dropping as much as 2.2%. And in the mainland, the CSI 300 index has dropped in 9 of the last 10 weeks. This relentless sell-off has turned China into the world's worst-performing major market in the new year. As we can see, since a peak reached in 2021, some $6.3 trillion has been wiped out from the market value of Chinese, that is mainland Chinese, and Hong Kong stocks, showcasing an acute collapse in investor confidence, both domestically and especially internationally. John Lin, Chief Investment Officer of China Equities at AllianceBernstein, expressed this week, quote, "What we are seeing this year so far really is a continuation of what we saw last year. These squeezing the toothpaste type of stimulus policies so far haven't been able to turn around the underlying bottom-up fundamentals of areas like the property sector." End quote. Regular viewers know too that domestic deflationary pressures, US-China competition specifically, and broader geopolitical tensions generally, and unpredictable state interference in the economy have also all conspired to scare away investors. Gary Dugan, Chief Investment Officer at Delma Capital Management, recently expressed, quote, "Foreign investors no longer fear leaving China out of their investment universe. We sense that international investors are just giving up trying to read China and will revert to a world ex-China opportunity set, hence resetting the benchmarks to MSCI World ex-China." End quote. Earlier this week, we discussed a 2023 survey of 100 pension and sovereign wealth managers by London-based think tank Official Monetary and Financial Institutions Forum, which found that none of them have a positive outlook on China. With all of this, the question is, after trillions of dollars in losses, where is the bottom? Aren't these prices now relatively cheap? Well, this is exactly what some are asking this week. After all, the MSCI China Index has never been this cheap versus the S&P 500 gauge from a forward earnings estimate perspective. David Ingalls, Hong Kong-based anchor of Bloomberg Markets China Open, tweeted today, quote, "You've probably heard Chinese stocks are cheap. This chart takes that to a whole new level. The Hang Seng Index's PE is now below the Nasdaq's PB. Those two valuation ratios should not even be anywhere close to one another. Pretty wild." End quote. Yet global institutional investors are still not biting. A very telling sign. Mark Matthews, head of Asia Research at Bank Julius Baer & Co., speaking to UK-based The Financial Times, expressed this week, quote, "China is a waiting game, and we continue to be waiting." End quote. What do you think? Is this a time to buy, or are prices likely to keep going down? Let me know your thoughts in the comments below. Meanwhile, this collapse in shares is, quote, "wreaking havoc on the country's asset management sector, pushing mutual fund closures to a 5-year high and another sign of waning investor confidence, end quote, in the words of US-based The Wall Street Journal. According to Bloomberg-compiled data dating back to 2014, about 240 local mutual funds were liquidated last year. Quote, that's the most since 2018, when stricter asset management rules triggered a major industry shakeup. Among the closed funds, 4 out of 5 had a stock-focused mandate, which was a record, end quote, in the words of the outlet, which added that China's mutual fund industry is confronting a double whammy as the country's stock sell-off intensifies, with the surge in product closures coinciding with a plunge in the amount of new subscriptions to a record low. The fund liquidations have accelerated the downward spiral in the world's second-largest stock market, forming a vicious cycle as retail investors abandon their once-preferred product for the safety of cash. This year has already seen the liquidation of another 14 funds. We now move on to our next development. Just quickly, if you're enjoying today's video, if you're getting some value from what I've been able to put together and present today, I have a huge favor to ask. That is to like and subscribe. It's only 2 clicks of the mouse, but it's a tremendous help for me and the channel. It's the best way to help the channel grow and be shown to new people. If the channel grows, it's my promise that I can put more resources into it, and I hope that eventually I can do this as my full-time job and really increase the quality of every episode. So if you'd like to see the channel grow, liking and subscribing is a huge help. And for those who want to help keep the channel financially sustainable, the channel relies primarily on subscriber support. Patreon and Buy Me a Coffee links are in the description below. Thank you so much, everybody, for the ongoing support. Next up, this week the Bulletin of Atomic Scientists published a new report on China's growing nuclear arsenal. It is quite a disquieting read. The report observes that within the past 5 years, China has significantly expanded its ongoing nuclear modernization program by fielding more types and greater numbers of nuclear weapons than ever before. I'm now quoting selected excerpts from the report directly. Since our previous edition on China in March 2023, China has continued to develop its 3 new missile silo fields for solid fuel intercontinental ballistic missiles, ICBMs, expanded the construction of new silos for its liquid fuel DF-5 ICBMs, has been developing new variants of ICBMs and advanced strategic delivery systems, and has likely produced excess warheads for eventual upload onto these systems once they are deployed. China has also further expanded its dual-capable DF-26 intermediate-range ballistic missile force, which appears to have completely replaced the medium-range DF-21 in the nuclear role. At sea, China has been refitting its Type 094 ballistic missile submarines with the longer-range JL-3 submarine-launched ballistic missile. In addition, China has recently reassigned an operational nuclear mission to its bombers and is developing an air-launched ballistic missile that might have nuclear capability. In all, China's nuclear expansion is among the largest and most rapid modernization campaigns of the 9 nuclear-armed states. We examined that China has produced a stockpile of approximately 440 nuclear warheads for delivery by land-based ballistic missiles, sea-based ballistic missiles and bombers. Roughly 60 more warheads have thought to have been produced, with more in production, to eventually arm additional road, mobile, and silo-based missiles and bombers. Here ends the direct quote. We note that while this number is growing rapidly, it is still dwarfed by the stockpiles of nuclear weapons held by the United States and Russia. And for those in the comments who are furiously writing that it is nuclear, not nuclear, you are of course welcome to make these comments, but I should let you know that I will continue using my preferred pronunciation. Meanwhile, on Thursday, speaking at Washington think tank, the Center for Strategic and International Studies, Pranay Vadi, the senior White House official for arms control and non-proliferation, explained that the United States does not expect formal nuclear arms control negotiations with China anytime soon, but it does want to see a start of discussions on practical risk reduction measures. UK-based Reuters reports that Vadi added, quote, "We know that their arsenal is still being built up. On the arms control front, we really want to see China respond to some of our more substantive ideas on risk reduction, and we're still waiting to see if they will," end quote. Okay, that is today's episode of China Update. Have a lovely Saturday. At this rate, there may be an extra episode tomorrow. There is still some material that we need to cover from this week. So I will either see you tomorrow or on Monday.